Let's kick off the markets report for today, the 8th of March. Right, the news events. Today I'd like to talk about the Powell's testament that happened recently. Uh, um, in the recent presentation of the semi-annual monetary policy report before the House of Representatives Financial Services Committee in Washington, D.C., the Federal Reserve Chairman Jerome Powell provided a detailed update on the state of inflation and the central bank's monetary policy outlook. Now, Powell offered what we say a assurance, to investors, uh, whereby he indicated that while the battle against inflation is ongoing, rate cuts could be on the horizon within the year. So that this is quite an important clue already, right over here, horizon within the year. Now, even it says inflation is ongoing, rate cut could be on the horizon. This is a more or less but it's a belief for them that inflation eventually will be brought down within this year itself. And Powell has also mentioned that they don't need uh, inflation to come to the 2% before they cut. As long it is down on the trajectory that they believe will hit that 2%, they will do it, right? So with that, that's one of the reasons why you've been seeing the movement of the dollar index as it came down and it came down quite strongly, right? Because the way this statement, the testament is being put out, right? So, however, he did cautiously note that the Federal Reserve's success in curbing inflation remains uncertain, right? Emphasizing a desire for great confidence before making any decisive moves. Now, this is more like uh um like a back door for them if anything goes wrong. But from the way word this first phrase itself, this is what they believe strongly already. This area over here, this is more like a backdoor, a BD, okay, a backdoor for them, right? So anyway, anyway, he also elaborated that on the Federal Reserve strategy, suggesting that the Fed is on a promising trajectory to achieve a soft landing, something that will give a lot of credibility to them, to the Fed, and economic condition where inflation is controlled without triggering a recession. So this is something that he believes, and he wants to. But with result, whether he's going to stay in power or not, that is another question come November. Okay, November this year, because Donald Trump has said that if he wins and becomes the next president of the United States, Powell probably would be fired. Okay. So this is something you need to see. We will know and see. But definitely this is what they want to create, that image that they can handle the economy when handle it well. And so that whoever is the chairman of the Fed, they are they continue to be so because of the capability, right? So Powell also expressed optimism that there is no immediate risk of recession in the short term, underscoring the Fed's commitment to economic stability. Now, a significant factor, right, in the Fed's inflation strategy is the condition of the US labor market. Now, Powell highlighted that a slight easing in the labor market is essential for reducing inflation to the Fed's target of 2% annually. So they expect it to drop a bit with these conditions that they are seeing right now. Now, despite a gradual cooling in demands for workers, the job market has shown remarkable resilience. The availability of jobs significantly outpaced the number of job seekers, with the ratio of job openings to unemployed individuals maintaining at approximately 1.4. Okay. And recent data from the Bureau of Labor Statistics Job Openings and Labor Turnover Survey, or better known as JOLTS, further confirmed the robust demand of the labor market. Okay, so we had this result this week, and you can see that as well. Okay. So jobs opening in the US remain high in January, with only a slight decrease to 8.86 million from the previous revised figure of 8.89 million. This slight dip, along with marginal changes in hiring and layoffs, suggest that labor market's enduring strength. Okay, so investors right now, they are closely monitoring the Federal Reserve movements, with the majority anticipating the first rate cut to occur at the June FOMC meeting, the Federal Open Market Committee meeting, with a 69.4% probability right now. Okay, so the anticipation underscores the delicate balance the Fed must maintain in navigating the path towards economic recovery and stability. So from these developments, we can see and also understand why the dollar index is retreating. So if there are any more changes, like for example, today we have the non-farm payroll data coming out. All these data will add, to the movements that we are seeing right now. So um, do expect, the way the trajectory is moving. Yeah, I think we need to expect a cut to happen already, unless we see another blow up figure and continue to do so for the coming weeks, coming months, sorry. Then that's a different case. But right now, they can't keep on adding jobs without, without a pause as well, because navigating the economic environment the economy in a high interest rate environment is something that mm, no, it may not last long. Okay, so that's what we see that way. Okay, so with that, that's the end of the fundamental report. Let's move on to the charts, and the charts has been